Morning, good morning, good morning, good morning. How's it going, everybody? Arturo, Sergio, Will, Steve, Piet, Rob, Svenborn, Terry, David, Scott, Cliff, Rongamer, Ed, John. Good to see everybody. Kay, Ralph, Jesse, welcome to the show. So, I was doing some checking around, and it appears that Amazon is on sale. Like, big sale compared to Walmart. Walmart, people trading down to Walmart. And a lot of their online business, very similar to Amazon. I mean, I see Amazon trucks constantly. I don't see Walmart trucks. Walmart trying to get the same day delivery type stuff going, but I guess Amazon trying to too with drones, but neither one seems to. I don't know. Are they actually getting it going? And that doesn't even consider the fact that Amazon has robotics, warehouse technology. Amazon has data centers, AWS. So, welcome back, my beautiful morning monster drinkers. Maybe you drink coffee too, but welcome back to the show where we sift through the market madness and try to find, some opportunities. I was reading the news, and it seems like the entire financial world is kind of collectively decided to panic and hide under the bed. We're seeing a lot of flight to safety type of trades, which is a fancy way of saying that investors are acting like squirrels in October, grabbing the nut and putting it in the hole and hoping for the best. So, are they terrified? Is a potential storm a brewing? I don't know. We're willing to pay a fortune, or it seems like a fortune, for a very sturdy umbrella that is gold and silver, even if it means standing out in the rain while perfectly good, perfectly capable keeper opportunities are sitting right next to him. And that, my friends, brings us to the story of the day, a tale of two giant companies, Walmart and Amazon. The story of a reliable old pickup truck versus the sleek self-driving spaceship. I'm talking about Walmart and Amazon here. Now, everybody knows Walmart. Retail legend, they've been around. It's the place where your mom dragged you for back-to-school supplies. It's where you can buy a garden hose and a gallon of milk and a new set of tires all in one trip. Dependable, predictable, and in the stock market, predictability seems to be a hot commodity right now. So hot, in fact, that investors are paying a premium for Walmart stock right now. It's been on an absolute tear, hitting new highs. To own a piece of this predictable, reliable brick and mortar king, you've got to pay a premium, a steep premium, around 38 times the current earnings. Think of it like this. For every dollar that Walmart makes, traders and investors are eagerly handing over $38 to buy the stock. They're paying for safety, for the comfort of knowing that people will always need to buy toilet paper and cheap socks. The consumer staples. And then we have Amazon, the disruptor of this online retail kingdom, the everything store that shows up at your door an hour after you thought you needed something. The company that not only dominates online shopping with over half of the entire U.S. market share, but also happens to run the digital plumbing of the internet with Amazon Web Services. Everybody kind of forgets about that. That's the part of the company that's actually growing hand over fist like a weed, popping out of the pavement everywhere there's a crack, powering everything from Netflix to the CIA. It's like a bona fide leader in the artificial intelligence revolution that everybody and their grandma uses. So you have the steady, slow-growing retail giant on one side, and you have the fast-growing, tech-infused, world-eating behemoth on the other side. One is in the past, and one is in the present. Maybe one's in the future. And here, my friends, is the punchline. This is the market's weirdest joke. The high growth, possibly risky, AI-powered, cloud-dominating Amazon, when you look at it in the lens of price to earnings, is way cheaper than Walmart. Way cheaper. Think about this. Right now, you can buy a piece of Amazon for only 29 times earnings. For every dollar of profit Amazon cranks out, you're only paying $29 compared to $38 for Walmart. That's a 25% discount compared to owning a piece of Walmart. The market telling you that the reliable old pickup truck is better, it's more popular than the wild spaceship of Amazon. It's telling you that the company growing its e-commerce by double digits and cloud services by even faster is less valuable than the one whose main growth strategy is just giving you a bigger cart to put more crap into while you walk around the store. Why? Fear. Classic story, market psychology. Investors so worried about potential economic slowdown that they're dumping anything that smells like tech or growth and running to perceived safety of consumer staples. They see Walmart as the fortress because you got to buy groceries. Recession or not, you got to eat. They see Amazon with its connection to the tech sector and AI stuff and cloud services as a somewhat riskier bet. It's an emotional decision, really. Not really a logical one. It's like selling your beachfront property at a discount to buy a bunker in the desert because you heard a storm is coming. Eventually. Maybe not this year. So what's the opportunity here for us? The people who actually pay attention and take opportunities instead of just following the herd. Classic case of what legendary investor Benjamin Graham called Mr. Market having a bit of a meltdown. The market, in its infinite and very short-sighted wisdom, is potentially offering you a deal right now, giving the chance to buy a company that's at the forefront of e-commerce, cloud computing, AI, artificial intelligence, cloud infrastructure at a valuation cheaper than a big box retail store, brick and mortar. Now, this isn't any kind of advice, and you should always do your own homework. Walmart isn't a bad company, and by any means, they're probably going to keep killing it, especially as long as the consumer is stressed. But it is, by most objective measures, quite expensive right now for the growth potential that it offers. Amazon, of course, has its own risks, for sure. But the price that you're being asked to pay for that risk today is actually unusually low compared to the growth that they're actually experiencing. The market is focused on the next 6 months. It's forgetting about what's coming the next 6 years. It's a chance to be greedy when others are fearful, to buy a spaceship for the price of a pickup truck. And that, my friends, is the kind of opportunity that gets me excited enough to crack open another monster today. Although one's probably enough. So let's dive into some charts and check out what else might be out there today. Welcome to the show, everybody. Hopefully that was informational, educational for you a little bit. Yeah, that's the whole point of the show. All trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, If you desire personal financial advice, there's somebody you can hire and consult for that. But, you know, nobody's going to watch out for your money more than you are. Just take a vested financial interest in your own financial well-being, and you'll probably do better than anybody you could hire. Because most people out there are just trying to make some of your money into some of their money. I mean, that's kind of the bottom line of everything, right? Whether you hire a plumber, HVAC guy, window installer, dentist, doctor, they're really just doing it to make some of your money into some of their money, maybe do a little service for you on the side. I mean, it's what makes the world go round. So take a financial interest in your own financial well-being. And let's see what we got cooking this morning. Hey, good looking. What we got cooking? So yesterday we bounced off of that 618 pretty strongly, and then came into a zone of ambiguity. Couldn't break out. Pulled back, and we've kind of ping-ponged off the roadmap line a couple times. This does set us up to potentially rally on higher. Today is a big options expiration day, the first monthly options expiration of the month of the year. First month of the year. Get the words in the right order, and we could have some chaos. I usually pull up the GEX charts at the end. That's gamma exposure, and see what the options market's kind of telling me. That's after I do it toward the end, because right now the market's not actually open, and that provides kind of a sketchy data for something that needs live data. So we'll take a look at the gamma exposure toward the end of the show. Hang around if you want to see that, or come back later if you need to go do something else. NASDAQ also did the same sort of bounce here. Same sort of bounce. Interesting. So we've got this. Let's go up a time frame. We made this big low back here at Thanksgiving, and we've made this high right here that we've ground in the dirt several times. This pullback, I probably should just take this line off of here for right now, since we haven't broken out. We're having trouble breaking out. This move up from this low to this high, and we've kind of not been able to get through this zone. We made a move up, we made a retrace, we made a move up higher, we made a retrace, we made a move up lower, and it presents this opportunity to get a bigger, deeper retrace in here. Now, we have some support, we have some resistance, and we have some option prices that may keep us kind of pinned in here through the rest of the day. We'll take a look at that toward the end. Like I said, this is not the most bullish price action. And when you compare it to the ES, we're actually sitting at a point that might bring a bigger pullback. ES has actually made a higher high since back here in October, when we topped out the market. We came up here and we made the higher high that I said, if we do that up near 7,000, it can lead to a big pullback. In Q, didn't have quite the same potential, but we've made a lower high. And that can be part of a bigger correction that could take us down here. I'm not saying it has to happen. We could break out and go on up. Like this target up here, 27,000. We could go cruising right on up there. But that's going to be a resistance, and then we might pull back. So is it a pullback before we go higher, or is it pullback after we go higher? Either way, it's probably going to be a pullback. Either way. Now, interestingly enough, I saw some work and statistics pulling the last, I don't know how many, like 20 midterm elections, and the average midterm election year experiences an 18% pullback. Somewhere along the way. 18%. So if you're looking at the S&P 500, 18% is going to be pretty big. Oof. This is the average too. So an 18% pullback could get us right down in this area. It's like 1,250 points down. That's average. So part of the time we go smaller. Part of the time we might go bigger. We're due a 40% pullback. We haven't had one in a good long while. It's about time for one. Whether it's this year, next year, the year after, probably just a matter of time before we get one. So a few different things lining up that provide risk to the downside. I'm permacautious. I don't like losing money. So be careful. Now, Russell probably still has a 2740 target on its back. Right there. On the daily chart, we popped on out. We tested that 1448. We retraced. We popping on higher. 2740, probably the next upside resistance. And if we tag that, that can bring a bigger downside. Now, that's not a ton of upside left right there. About 1.75%. But it is possible that we go ripping on up here. Another 15% higher. If you were, wanting to try to grab a piece of this, UWM, Ultra Russell, might be a way to play it. Just buy some shares. Yeah. And Kimberly making a joke that, I take care of all her money, so. So far, oil bounced off of the roadmap line. Initial move down, holding above the downtrend of highs. It's kind of a micro uptrend as long as we're above that. Resistance here, support here. If we get back below support, probably going for that 50 target down here that I've been talking about for like 3 years. This is still in a giant downtrend. I don't see that breaking for now. I think everything may chill out in the Middle East for now. We drop back down in here, and then everything gets spicy in the Middle East, and we see prices going back up here. It's kind of what I'm expecting to happen. Could be a nice big fat upside opportunity if we get down to 50 to add some exposure for potential 100% gain up into the 100 area. How would you do that? Just pick up some shares of USO. It's been doing nothing for a little while. If you wanted to play the leverage way, you could buy some shares of UCO. That's also been doing nothing for a good long while. Gold. Sitting here at the highs, just churning. Churning, 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 burning, burning, burning. Looks like we're taking a rest. Or maybe another pop. Now, Monday, the market is closed. We've got a holiday in the United States. Bank holiday, market holiday, right there on Monday. So the market will be closed. And Monday, January 19th, Martin Luther King Day MLK Day. February, we have Washington's birthday. No holiday in March, but April, we get Good Friday. May, we get Memorial Day. June, we get Juneteenth. July, we get Independence Day. Nothing in August. September, we get Labor Day. Nothing in October. November, we get Thanksgiving. And then December, we get Christmas. So there you go. That's kind of the holidays of the year right there. Almost one a month. With these holidays in here, it leaves us 250 trading days. And we've already had 10 of those down. So you got 240 days to make money in the markets left this year. Dun, dun, dun. Next week, more earnings coming out, but not a ton of. Looks like we got President Trump speaking on Wednesday next week. Some core PCE, that's Powell's favorite inflation number, coming out on Thursday, right ahead of the FOMC meeting the next week. So they should be able to take those numbers from Thursday, PCE, and roll them into the rate change decision the next week. But there's also big tech earnings hitting hard that week. So next week, maybe the calm before the storm of FOMC and big tech earnings. Be careful out there, everybody. And if you believe in seasonality, VIX tends to start ramping up toward the end of the month. Let me see if I can pull that up really quickly. Go to Discord and try to pull it out. See if I can find the VIX seasonality chart. There it is. Looks like this right here. Now, VIX is volatility for the S&P 500, not necessarily for NASDAQ. We tend to see a little bit of volatility coming into early February, then we kind of chill out mid-February, and then March, April, we've had, this basically is COVID and Liberation Day right here causes some volatility in the 20-year history. But even if you took out COVID and Liberation Day, we still usually have a very spicy start to the year. And usually October is pretty spicy. And this doesn't even go all the way back to Black Monday and pick up that for October. So it's kind of like this annual cycle where we go through a calm period, then we go through a spike, and it's almost like quarterly. Chill out in June, back to spicy October, then chill out for December. So expect a little market chaos from here on into April potential. That's historically just kind of what we get. If you go into it expecting it, I'm not saying trade for it, I'm just saying expect it. Have a plan to take action if we start experiencing that. Now, gold sitting here at highs can go higher very easily. Might just rest right here. Markets close Monday, so if you have the gold trade on, Tuesday will be the day that we can potentially take profit if it doesn't spike today. Bitcoin came up yesterday, pulled back, and we're just sitting here at the bottom end of the range from Wednesday. If we break back down, probably going to take another swing back lower. And all the things I've said, if we break down below this uptrend of lows, probably taking a trip down to 75. If we can get up through the roadmap line, 106 on the upside. This has finally hit the roadmap line. Stopped cold. It's a lower high still. That's not giving me great confidence that we're going higher. Just throw that out there. This breaks down. Can easily take a trip back to a lower low than what we had back in Thanksgiving time frame. This looks like a consolidation before another drop to me on both Bitcoin and Ethereum. Like a suck in almost. NKD popped up here to new highs and just stopped cold on the 1272. This might need a swift retrace to the breakouts, or it can push even higher. Global liquidity proxy indicator right there. Dollar grinding on this roadmap line. Dollar pops through. It's going to put down pressure on gold and silver. Oil, if we bounce off and come down, that puts up pressure on gold, silver, and oil and other commodities. Right now, this is bearish with a lower high, that high, lower high, downtrend coming into it, below right back here in September. If we get more down pressure, we would expect to come down below this low from September. Just something to keep a macro eye on. Now, if we break above and we get up above 102, it's probably going to cause the short dollar trade to blow out, and we may see a very fast appreciation on the dollar index compared to other currencies. So that's kind of our range right there, up to 102. Still got down pressure. Below the roadmap line, still got a downtrend cooking. Apple still wants to reach down and touch the roadmap line. Right there. Amazon just consolidating right here. Upside target still is 265. This is a high probability setup. We kicked off right back over here. And despite the pullback, it's still set for going on higher. Now the stop is $1 below the low, which is back here around 211, 212. $1 below the low. This can pull all the way back down in here and then still run up to the target. So it doesn't just have to rip from here, from the entry. It can pull back and hit the roadmap line again, do a double bounce or even a triple bounce before we go all the way up there. Yeah, this is the initial bounce right here. Uptrend coming into it. Bounce. Entry, trigger, target, average. This lasts 45 candles on average. That's a little over 2 months. So on average, it takes 2 months from the entry to the target. But averages, sometimes they go faster than they average, like this one right here. We got there in like 1 day. But sometimes they take longer than the average. And if you had 3 standard deviations to come up with the 99th percentile, that would be 7 months. So 99% of the time we'll do it within 7 months, but that leaves like 1% of the time we go on indefinitely. So if you're trying to play this with options and be aggressive, be careful. As always. Google kind of struggling to get through the 337. We tagged it. It may need to retrace back down to 304 before we can take another run at getting through and heading on up to 385. But the next fib line up, kind of usually ping pong through the fib lines, climb the fib ladder. 385 would be the next line up there. Meta, come on, baby. Starting to do what I wanted it to do. We did fill that gap. Holding on to it, getting some bullish price action here. If we can get on moving, I may take a long. I want to get through the roadmap line and confirm that we're on the path to 1100 to 1300 target. Way on up there. And that may be out to 27, maybe 28, before we can get up there. Could be a good long time. A way to play this, maybe METU shares. The leverage ticker for Meta. METU. have a nice big fat upside. Microsoft looks like we're going to take a trip on down in this 415 to 425 area. We broke down, holding on to a lower low just barely. So we did a roadmap bounce, pushed it down, and we're holding on to those fib lines. So it may bring another bounce. We may come back up, retest that trend line, even though it's not very strong, and cruise on down. It's a downtrend until we confirm the bottom. So far, downside would be where I expect it to go. NVIDIA, resistance at 195. Till we can get through that 195, still have downside potential back down in here. And if we get through that, if we poke below it, 150 would be where I expect it to find support. That's the breakout level from back in December 24. Just in case you don't remember, it's right there. Tesla has the bounce, has the retrace, has the bounce of the bounce, and has the retrace on the retrace, nested, held the 618. So we moved up, we retraced, we moved up, we retraced, we moving up. If we can break out above this high, it sets it for a run into earnings, which may cause a pullback before we get more run. That's what it looks like right now. Netflix still grinding on down, hunting for the bottom, down around 85. Now I go pull gainers, things moving $2 more up in the pre-market, put it on the gainers list. I pull things moving down $2 more and put them on the decliners list. And I also build a list of setups that are valid on the daily roadmap line bounce for the day. Today had 19 tickers. So I'm going to go ahead and start jumping into that list because there might be some interesting things in here. So this pattern, if you haven't seen this pattern, you don't have the roadmap line, link right down there, channel homepage. Go watch it. The video has the code for the indicator, like for free. You just have to watch it, copy the code, put it in there. If you're like, whoa, code. I am not somebody that touches code. I don't know what the fudge code does. Links in the description, $5. I have an easy button. You just click it, put it on your chart. No big deal. Also, if you do that option, I give you a list for 3 months, a weekly list for 3 months of tickers that are potentially bouncing. Now, the difference between that list and this list right here today, that weekly list is tickers that are on the top 400 by options, and they are potentially going to bounce. This list I'm going to go through right here has the entry already triggered, but I go through 4,000 tickers every day looking for these, and most of those tickers don't have liquid options, if options at all. So this one right here has an upside target of 108. Stop is $1 below the low. 59 trades in the history. That's good. 79% profitable. That's good. That's more than the average. 75 is the average. And profit factor 1.98, which is, this is a good one right here. It's a really, really good one. Takes 30 trades to be a statistical significance for these numbers over here. And this one looks pretty darn spicy right here. This tends to trend and pull back and continue. Last one worked out pretty nice. It took a while. This is a pretty nice one, I have to say. I like it. I might grab a few shares of that just to see. Really nice. ARI, another nice looking one here. Statistics don't. So looking at the statistics down here, 11 trades means that these don't matter. 11 trades is below 30. 30 is what it takes to get a statistical population. Jumping in here, looking at this, we've got the high, got the low, and we didn't kick it off. So the Python code I have that searches for the 4,000 of these, found this little baby bounce right here. This high, this low, that entry, and it actually, the code picked it up. So 10 is the upside. Now, a warning. Under 20, when we're below 20, it's what I call low price stuff. Low price stuff doesn't always work. So I would be cautious going after this one. Stop is down around 850. Target's up at like 1050. It's a reasonable risk reward though. Next one, BLX. Got to pick up the US version, not the crypto version. There's the high, there's the low. Kicked it off back here. Have a new baby low, high, baby low, new kickoff. Baby target up around 46, big target up around 50. Stop for the big pattern down around 37. Stop for the little target down around 41. CNP. Nice trend, pullback, continuation. Closed above the 618, 40, 90 target. Stop down around 36. 40 trades, 72. Negative profit factor gives me a caution flag on the play. I don't think I'd take it because of the negative profit factor. It tends to lose more money than it makes. CWN, CWEN, say all the letters. Here's the high, here's the low. Kicking off. 3760 target. Stop down here around 3080. 1485, 2.3. 14 is not a statistical population. So even though these look really spicy, take them with a grain of salt. 75 is the average and 1.2 is the average. The trade works out on average 3760 targets. DNLI. Another nice one. This is almost textbook right here. Made a big low, came up through the roadmap line, got a retrace, and potential continuation. There's the high, there's the low. Entry, 2165 target right up here. No meaning behind the statistics, but this one looks more like a downtrend, and the algorithm in TradingView has been in it for a few months. Lower highs, I probably wouldn't touch it. ESE. Here's the high, here's the low. Nice uptrend, pullback. You know, you see the last one, uptrend, pullback, continuation, pullback, continuation, 234 targets. Stop down here at 193. 33, 81, 2.7. This is another really good one. Really good one. 33 is what we need. 81.8. That's better than the average. 2.7, better than the average. This one tends to perform. What that says to me, this stock, ESE, tends to do trend, pullback, continuation trades and they're more reliable than the average. FE. Looks like the same deal here. 50, 82, 1.3, another strong one. Here's the high, here's the low. There's the entry, 48.95 target. LE, another nice one. This has been in it though, for instance, back here with the 1737 target. This is just a secondary entry, same target. LH, pull up the US version of this, not the SET version. And has this high, has this low, entry, and 277 targets. 3177, 2.7, another strong one. Not a big move though, just a nice little small move. LMAT, downtrend, I wouldn't get involved in that. It picked up this little baby, this high, this low, that entry, target probably around 89, 40. I wouldn't mess with it. MSM, another downtrend, lower highs, probably wouldn't mess with that either. Picked up this high, this low, this entry, target right around 89, 90. Pep. Pepsi. If we can break out through this little downtrend right here, it looks interesting. It did technically trigger that with a 155 target. This last one back here failed. With this downtrend all the way across here, I would be very careful. This looks like a reversal, but it hasn't played out yet. If we can hold on to this low and pop higher, 155, that wouldn't even take a higher high yet. So that could work out, but and still churn off into a low. This is not a new trend yet, though. It's a trend that's failing and looks like it could go lower. I'm not a fan of that. Despite, you look at that 56, 76, 1.4, but it also didn't trigger this version of the algorithm for another entry right there. This one did lose. This one didn't trigger. PNR. Big picture, we've got this high, we got this low, and we need a close above the 108.75 to kick off this 116.58. Now, Python algorithm picked up that high, this low, because of this price action below the roadmap line here, and 109 would be the target, but the filter on TradingView didn't like this setup because of probably the duration this has taken to get off the roadmap line. PPL, we need the US version of that one. And move that drawing. Here's the high, here's the low. Didn't quite get a close above. The Python version picked up that on my filter. 37 target. I would wait for the close above 36 for an entry at 39 and target at 39. PRK, downtrend, I don't like it. Doesn't mean it won't work. I just don't like to go counter trend. 169.80 targets. And last but not least, UTG. Here's the high, here's the low. Entry, 39 targets on that one. Let's go check out some other stuff moving. NVO, trying to break through the roadmap line. That's interesting. If we can get through and back test it, that could reverse off this big downtrend here. Hood took a big spill after the market closed yesterday on crypto bills getting punted. I've been talking about this getting a bigger retrace, and well, for now, that looks like what we're going to do. Funny enough, price action foretold we were probably going to do. This is probably an A, B, C correction. I've had that big arrow on there for a little bit. I've been skeptical that we were going higher on Robinhood until we could get down in this 80 vicinity right there. See what else we can find. Rocket Lab. Oh yeah, keep going, baby. I want to see that retrace again to give me another opportunity, but a beautiful upside. TSM, the CEO of TSM saying that people aren't bullish enough on their stock. I mean, talk about a hype man. This needs to retrace to give another entry, but they're saying there won't be a pullback. And that's just not the way stocks trade. So next pullback might be a buying opportunity, but I would be careful. It's flying close to the sun. The wings melt when they're made of wax. LAB, when we get above 201, 67, 287 target. Bloom Energy, almost up to the 163 target. Capital One, that may be this. So watch for a turn down off of this area right here. Could take a third move down before we find the bottom and turn higher. Carvana was popping. Now that's lower high. Watch out for the retrace to the roadmap line. Light was popping. Now we're dropping. AMD flying up to the 618 here. I'm still looking for this to visit this roadmap line and a lower low than that low right there. Somewhere in the 180 area, that would be the opportunity to buy or the bigger upside. COHR. And just grinding up here, no upside targets. Momentum, probably gonna take a spill back to the roadmap line. LEU, look for that close above 346 to get the 511 target. ASTS, oh, finally hit the target. Look at that, baby. There you go. If you were trading that one, that's the target, baby. 126 above that. Be careful. That can kick off a retrace. Can go on higher to 163, but that was it. From the entry back in early December, there you are. That's it. ETN. Maybe starting a reversal here, but first move down, retrace, big, this all could be complete. We're going to need a move back up through that high right there. Some sort of retrace to kick off the bigger upside potential on that. MUU coming on up to that 415 targets. And see what some bias for the day is. Let's check it out. Get up my night vision goggles for, let's see, QQQ. Pull up my NVGs. Looks like we have, oh, interesting. We're getting some big levels out here for Monday. We haven't seen that been happening for more than a week. So 627 is a big level, and the 610 level has kind of evaporated off of here. So now we're kind of seeing some nice level down at 620. A lot of gamma right up there at, you kind of see it. A lot of people find this easier to look at. We're at 622, so we're hanging out right here. There's big put level at 620. There's big call levels up here. So being below the call levels screws the call holders. Being above the big put level screws the put holders. There's a big chunk of puts at 626. So somewhere in this, I'm thinking that we hang out between 620 and 626 probably. The market can take the most amount of money for the most people. Yellow are calls, purple are puts. And maybe where we hang out today for OPEX. Look at the heat map. We tend to hang with the bubble. The bubble right now hanging up here at 627. We may come back up in this area. There is that big chunk of puts down here though. We may just hang right in here, right on the bottom side of the bubble. So these the bright numbers here, I call it a bubble. When there's big numbers all clumped together, GEX bubble, gamma exposure bubble. It's where the big chunk of options are, and the market likes to take the most amount of money for the most number of people it can. So when they're playing calls, staying under the calls is where the option, where the market makers can make the most amount of money. And trading desks, I think, arbitrage this also. So we may see this hang out right in here for today for QQQ. Checking out SPY. Yeah, Tuesday. Well, I said Monday, Tuesday, of course. The 20th. It has the date on there, so. My brain is automatically tuned to just Monday through Friday trading. We're at 692, which is going to be right up in here. That's interesting. So there's a large put level at 691. That's probably going to be support. We may hang out right at 691 into the close today. So this is big chunk of calls, and to screw those calls, hang out right down here. So we may hang out right in this vicinity and not move much today. Look at the price action. So we may just hug the roadmap line on Qs. Kind of going flat with no trend. We've just been chopping in here for a few days. This is just going to keep chopping everybody up, I think. Chop everybody up today. SPY 691, and just going to keep chopping everybody up. So looks like we may pin right in this area here today. Stay right in the pink. That was what I 2 days ago, 3 days ago, I outlined that we'd probably stay right in the pink through today's option expiration. That's what it looks like we're going to do. QQQ. And we may stay right near the middle here. That was the big gamma level for the option expiration today. So we may hang out just right in that vicinity. Don't expect a lot of movement today. Now, if price gets away, the downside is probably easier than the upside. There's more calls sit up there. This is the important part, is there's more calls in the market than there are puts. More exposure on the call side. That makes down easier than up. So be careful out there. Downside has more risk than the upside right now for participants. Upside has more risk for market makers. Unlikely to go higher. More likely to go lower. And that's the show. So I'll be back. Same bat time, same bat channel Monday morning. Or Tuesday morning, I guess. Well, I'll probably be live on Monday for a crypto special. I think I'll do a crypto special. Maybe some of you will come see me. Otherwise, I'm on Market Masters 11:30. Links in the description. And I'll see you later.